The inventory of homes available to purchase in the Portland metro area is still on the rise. In fact, buyers now have 35% more to choose from than they did at roughly the same time period last year. I'm Ron Milligan with RE/MAX Select here in Portland's Pearl District, and I have, as usual, the weekly market statistics for you for the entire Portland metro area, north and south of the border, Washington, Southwest Washington included. So let's start with the big news, which is inventory is still increasing. Last week, we went from 3275 to 3708, which is a really big increase. Around 400 extra listings at the end of the week, which is probably the biggest jump we've seen so far this year. It was an incredibly large jump in new listings. Last week, we had a holiday weekend, Memorial Day weekend, kind of a quiet weekend on the market. Week before, 360 new listings. The week before that, 300 listings. So we're continuing in that same vein of rapidly rising listings, although I do expect that to start to level off as we head towards the end of June and get into our quieter summer months here in the metro area. For context, last year at this time, that number was 2744, so roughly the same time period, and that is approximately a 35% increase in the number of active listings. For context, though, last year probably isn't the best year to be looking at because it was such a crazy, aggressive, bonkers year for real estate. Probably the craziest, most aggressive market we've ever seen in the metro area. So what I did do last month, the RMLS, the Regional Multiple Listing Service market statistics came out for May just yesterday. So what I did is I took those May numbers and I plotted them back year after year after year, going back 10 years for the month of May, just to see what the inventory numbers have been like in more reasonable markets, to give us a little even more context for what that number that we're looking at today actually means. So when you take a look at this, keep in mind that these are numbers just for Portland. It doesn't include any properties north of the border. For some reason, RMLS breaks those out versus our sampling, which includes the entire metro area. So you can see, at the end of May, we're at 2782. That number's probably closer to, 3,000, 3,100 this week, just because that's at the end of May, and we've gone beyond that and seen a lot more listings hit the market. So let's pretend that number is probably around 3,100 or so. And we can look back on last year. Yeah, last year it was considerably lower. But look, May 2020, also not a normal year. That was when we were just coming out of a bit of freak out from the coronavirus, and interest rates dropped really low, and buyers had kind of gotten wind of that and decided that they were going to go out and start buying. So May, June, July, August, took off. Leading up to that, it was very quiet and everything was kind of frozen. 2019, you can see that, 17, 18, 19 were more kind of normal years. 4,300, 5,300, 61, 6,200 listings. 2012, where we have 8,742, that's a lot of listings, but that's also the bottom of the market after the mortgage meltdown. And you can see that number dropping down. But 15, 16, 17, 18, those were all pretty normal years. More aggressive and more of a seller's market, but still, the numbers aren't terrible when we look at 3,100 versus the rest of the numbers that we're seeing for more normal years versus what we had last year. I do have a whole number of a suite of graphics and statistics doing the exact same thing, and I'll be doing a video about that coming up shortly. The other thing that we need to talk about is demand. What have buyers been doing? And if you take a look at this, you can see that the number of new pending deals is down. A couple weeks ago, 968, last week 874, and then 698 this week. And that's about 200 listings, 200 transactions fewer than we saw approximately the same time last year when I checked my notes for what we saw last year. So buyer demand definitely is waning, and we're seeing fewer transactions than we have in the past. So the number of homes that sold was 688 versus last year, which was 685, roughly the same week last year. Feels like it's on par with last year, but the thing I've been noticing is here's a little secret. Agents aren't always the quickest to change the statuses of their listings. So when something sells, sometimes it takes them 3 or 4 days to change the status. And what I'm noticing is last year, there would be maybe 180 more that went under contract when I looked back like a couple of months later. So for example, that 685 from last year did rise up to 803 when I just checked it a couple of days ago. What I'm noticing is that 688 this year, that number that we have this year, agents are actually more on top of it. And I think right now that's because there's less going on. They're getting the one offer. They're not having to do tons and tons of paperwork with 14, 15 rejected offers and then get back to changing the status of the listing. So I suspect that even though these numbers look equal last year, we're still going to end up with more sales than we had this year, probably by about 100 or so. How did the properties that sell do on the market? On average, they spent 15 days on the market, and they spent a median of 5 days on the market. That number was the exact same last year at this time. The average sale price came in at $657,821 versus last year $594,769. That's about a 10.6% increase in the average sale price year over year. But as I keep saying, that's kind of a volatile number. If we look back to previous weeks, last week it was 15.6, the week before 9.6, and the 2 weeks prior to that right around 14%. So it kind of jumps up and down because we're dealing with a smaller sample of numbers. The median came in at 590 versus last year 521. That's a 13.2% increase in the average sale price. Expect to see these numbers shrink as we go forward as the average sale price it just kind of mellows out this year versus last year when it was still rising throughout the balance of the year. And that is normal. Usually we see our highest average sale prices in May or June. One thing that I did think was really interesting was the list to sale price. So on average this year, sellers got 3.15% over asking price on average. Some got a lot more, some got less. And the median came in at 103.61, so 3.61% over asking price. For the first time this year, we did better last year than we did this year. Like those two numbers this year were lower than what they were last year at 104 and 104.31. So showing what's going on with our average sale prices and our median sale prices, there's definitely deceleration. They're coming down off of those highs that we've been experiencing ever since the summer of 2020. Most of the big players are still predicting appreciation nationally for our real estate market. I'm not seeing anyone who's starting to scale back, although we may see that a little bit in maybe a week or two. It'll be interesting to see because I feel like the national market is trailing behind what Portland is doing. I think that we're a little ahead of the curve when things are slowing down. And other markets have other factors, like with Wall Street money looking to preserve assets and throw a whole bunch of cash into real estate as inflation hits. One of the best hedges against inflation is real estate, and they know that. We don't seem to have much of that money in our market because they seem to be going towards markets that are very positive, are expecting a lot of growth, and don't have a lot of regulation. Of course, in Oregon, we have we can no longer do no-cause evictions, and we have caps on how much you can raise the rent. And I think a lot of those big investment firms are looking at Oregon saying, this isn't going to work for us. I think that's okay, though, because our market is going to be a little more stable. We're not going to be subject to a bit of the volatility of these huge investment funds throwing massive amounts of money into our market, like Phoenix. When that money pulls away, it's going to probably have a much larger effect than it would have had that money not been there. So as always, I love your comments. Feel free to comment down below anything that you saw, heard, or experienced. I do read all the comments. And I would love it if you gave me a thumbs up. And if you find this information interesting, or if you know of someone who might, please subscribe to the channel and share this video with them. And I will see you next week.